Here we go. Hey everyone, welcome back. Thank you for joining the show. Again, I'm Jason Neufeld with Elder Needs Law. And as a reminder, I recognize that I'm just an elder law attorney and there are so many other professionals related to what I do, but they just do different things. And so my goal is to present to you information that I have tangentially is related to what I do, but to hear directly from the experts themselves. So today I'm thrilled to have Josh Blum. He is with Mutual Mortgage. He is a home equity retirement specialist. So he's specializing in reverse mortgages. And Josh, welcome. Thank you for being here. Why don't you introduce yourself?
Jason, thank you so much for having me. So like you said, I'm a home equity retirement specialist. That's fancy words for saying I specialize in the reverse mortgage. That is all that I do. So day in and day out, that's what I live, eat, and breathe. My background's all financial planning, Jason, as you well know, for the audience and the listeners and the viewers. I've been in the financial services industry for over 16 years, almost that entire time spent specializing on retirement planning, specifically retirement income planning. And in the last 3+ years, focusing solely on the reverse mortgage as a niche within that space. So like to say I have a lot of experience and a great foundation working alongside financial planners and other professionals like elder care attorneys to just make sure that everything that we're doing is aligned with the client's goals and what's in their best interest.
Yeah. And terrific. You and I are in a similar business in the sense that we are interested in getting people access to resources that they normally wouldn't have so they can lead the highest possible quality of life. I do that through Medicaid planning. I help protect people's assets, get them qualified for these benefits they normally wouldn't qualify for to give them extra money. You're doing the same thing. So let's talk about the reverse mortgage. I think there's a lot of misconceptions about it out there. We got, I think, Tom Selleck on TV telling us that he trusts it, and so we should too. Let's start with very, very basics. What is the difference between a reverse mortgage and the regular type of mortgage that everyone is sort of more familiar with?
Yeah, we'll start with the name. Reverse mortgage came out as slang. It's really 9 out of 10 of these are home equity conversion mortgages, HECMs. Mm-hmm. The reverse mortgage is slang, and it's appropriate because traditionally the reverse mortgage was a tool where if I have a lot of money in my house, if I have a house that's paid off or close to paid off, I could draw money out of my house. I can borrow money from my house and pull money, as opposed to a traditional mortgage where I'm putting money into a home. Mm-hmm. A reverse mortgage, very simply put, though, truly is just it's a way to access the money in your house. It's a loan, like traditional loans. The primary difference and the major benefit being, Jason, that if I draw money from my house, no matter how I choose to do that, I do not have to make a monthly payment on that money. The balance becomes due down the road once certain stipulations are met or certain conditions are breached. So it operates very differently. And for retirees or people near retirement, it certainly offers a great way to access what might be a substantial amount of their wealth without having to impact cash flow on a negative basis.
Right. So you don't have to make monthly payments. So I think that's why most people are using it, because with the traditional mortgage, you get your mortgage and then you're paying the bank back every month, principal plus interest. With a reverse mortgage, you're getting that loan money, but you're enjoying it. You're not paying any of it back until, of course, whether they pass away or whether you want to sell the house and things like that. Is that about right?
It's exactly right. The only thing I'd add to that is you are responsible for taxes and insurance. If you have HOA, homeowners association dues, you're still responsible for those. It's principal and interest that you're given the choice to defer if you so choose.
So here's what I typically hear about reverse mortgages is they're good for people who really kind of don't want their house after they pass away. They don't want to pass it on. They're kind of comfortable with, I'm just going to enjoy the equity. When I pass, it's probably going back to the bank. Is that accurate? Is that true? Is that false? Somewhere in the middle?
I'd say that's a really big myth and misunderstanding around the reverse mortgage. And I'll kind of compare it to like 2 jugs of water. To kind of keep it simple. For a lot of people, if one jug of water is the money in my house and the other jug of water is my money everywhere else, a lot of people will spend the jug of water. They'll pour that jug out until it's empty. and they'll keep the jug that's the money in their house.
Mm-hmm.
But if you think about it, if I'm pouring from both jugs, or I am pouring from the jug that's the value of my house, then there's definitely validity to turn around and say, well, I'm not pouring out of the other jug, or I'm not pouring as much out of the other jug. So it's not that you may not be passing on the full value of the home, but you're probably passing on other assets and value somewhere else, because it's all part of the greater wealth that somebody's dealing with. So it's just a question of which wealth am I passing on, if any of it, because unfortunately, just a lot of what we see is people don't have enough for a long retirement, 30+ year retirement. A lot of us don't have enough saved up for that, or we're not prepared for the financial shocks we see from healthcare. And so it's really just a question of, are we going to spend all of our money no matter what? And if so, figuring out what the best way to do that. So I think that's a big myth, and it just needs to, the way people look at it, it shouldn't be in a vacuum. It should be part of the bigger picture.
So, and this is maybe not a fair question, and you can answer it kind of however you want. When does it make sense? When does a reverse mortgage make sense? When does it not make sense? And maybe what alternatives are you advising people to consider before they are entering into a reverse mortgage relationship?
So it's a great question. It's totally fair. It's a tool, which means it's very appropriate in certain circumstances and for certain people, and wildly inappropriate in other circumstances and for other people. A good rule of thumb with the reverse mortgage, from my perspective, is it absolutely needs to be somebody who intends and plans to stay in the home. Mm-hmm. I talk with a lot of people, and they say, well, I don't know. My intent is to stay in the home, but I might not. Okay, that's all right. A lot of us don't know what the future is going to hold, but unless you have an active plan not to stay in the home, our assumption is, because this is what plays out experience-wise, most people will stay in their home. So you have to want to stay in your home. Really, it's in all likelihood going to be a large percentage of your wealth. So if you think about, well, how much am I worth and how much of that's actually in the house, it's going to be a pretty big chunk of it. Mm-hmm. And for the average person in this country, that's the case. I think the statistics are somewhere around 68% of a retiree's wealth is tied up in the home. Makes sense. So I need to age in place and want to age in place. And a lot of my wealth is tied up in the house. And you could argue pretty soundly that the wealth that somebody does have outside of the house, if it's heavily invested in IRA money, which is going to be treated as ordinary income, it could be really, really worth taking a close look at the reverse mortgage for somebody that fits that picture. So that's kind of a very simple, broad stroke picture, Jason, but it applies to probably a lot more people than we ordinarily think about the reverse mortgage for. Who it's inappropriate for, to me, is the very wealthy, who have other instruments that many of us don't have access to, that are probably better to use, and truly people who are painted into a corner or backed into a corner. It's not that it can't be used, it's just typically the least effective there. It's much better as a tool to say, hey, I can see that I've got an issue coming up. How do I avoid being in that position? That's where it's best used. And that's really where other options come into play. Because the reverse mortgage, Jason, to the point of the question, are there better options for people out there? Well, it depends on your situation. It should probably be considered a lot earlier than it is. Mm-hmm. And it should be considered alongside other options. So I think for a traditional retiree, especially in today's current interest rate environment, well, what kind of normal financing options do I have if I need to access money from my house? Would a 30-year conventional mortgage make sense? Would a traditional home equity line of credit make sense for me? And in a lot of instances, it very well may. It doesn't mean you should preclude looking at the reverse mortgage. It should just be something alongside that, and your due diligence is done, as opposed to, oh, let's only look over here and ignore it completely until down the road, which is probably what people have done the most in the past, but would be better served by not doing that.
Yeah, and I'll tell you, to your credit, I've referred a number of clients to you over the years, and I've had several who have come back. Hey, first of all, everyone loves working with you. You're very friendly, and you explain things very well. You're very patient, and you really do explain to people the full gamut of options available to them. And I've had several clients that I've referred to you saying, Josh told us the reverse mortgage wasn't for us. And that's always really impressed me, because that's what you do. And you do absolutely have the client's best interest at heart, which is important to me as someone who's making a recommendation. So I want to thank you for that. And I know I have firsthand experience because I talk to my clients after they talk to you, and you do always do the honorable thing. So thank you for that. Another maybe fact or fiction, I think a common maybe it's a myth, maybe it's true, is you hear about the excessive fees associated with reverse mortgages. So maybe talk a little bit about that. How do the fees compare to other loan products? And what do we have to say about that?
Yeah, it's a very valid point, especially here in the state of Florida.
Mhm.
So if we were to look countrywide, are there fees that are unique to the FHA, home equity conversion mortgage, what most people consider the reverse mortgage? Yes, there are unique fees to that. The state of Florida in particular happens to, I think, have the highest fees in the country by virtue of how real estate and refinance transactions are treated in the state of Florida. I'll talk primarily, Jason, I think about why there's an extra unique fee to the reverse mortgage. And the reason is simple. There's an incredible unique benefit to the reverse mortgage that you don't have in any other sort of financing you're going to be looking at, which is optional monthly repayment. When we look at any other sort of financing on the home, we have a payment due on a monthly basis. I mean, we are going to have to make a payment.
Right.
And that's over time how the lending institution is going to make money and make profit.
Very fair.
Pretty straightforward. With the reverse mortgage, the lending institution doesn't know when they're going to make their money. It could be in a year, it could be in 10 years, it could be in 30 years. It depends. And the lending institution doesn't necessarily know how much they're going to make. There's some big question marks there. So there's something called a non-recourse feature to the reverse mortgage, which is the feature that is that benefit. I don't have to make a payment. The feature also protects the consumer, and it protects them by basically saying, if I do a reverse mortgage and I have a loan balance that's growing over time because I choose not to make payments, I'm still borrowing money, so there's still interest, and I choose not to make payments, my balance will grow. My balance and my liability on that balance cannot exceed the value of the home. Essentially, sale of the house, to make it simple, satisfies my obligation as the homeowner. That's not to say my balance couldn't be higher than the value of the house, just that I, as a homeowner, would not be responsible for that.
Sure.
Now, a lender might take issue with the fact that, hey, I'm owed a lot more than this house is worth. And that's the non-recourse feature. So everybody pays into an insurance fund. It's the same exact insurance fund that traditional FHA mortgages for first-time home buyers is paid into. Same exact mortgage insurance fund.
Right.
That mortgage insurance fund protects not just the consumer, it protects the lender, because if there is a balance that exceeds value of the home, it's paid to the lender through that insurance fund. There's a cost associated with that because we're not making monthly payments here. What the Federal Housing Administration decided to do is they turned around and they said, okay, well, we're just going to take 2% of the home value, whatever it is, 2%, and we're going to make that a fee that you're paying into the insurance fund. So when you get to the closing table, if you have a $500,000 home, that's a $10,000 fee. If it's a $400,000 home, it's still an $8,000 cost.
Got it.
It's real money. And it's what makes the cost to reverse mortgages so much greater than any other type of financing we see out there today.
Okay. Very fair. Straight question with a straight answer. And we appreciate that, Josh. And thank you very much for being here. This is Josh Blum with Mutual Mortgage. We're going to put his whatever information he wants us to provide, his email address, his website, his phone number. We'll put that in the show notes for you guys. And you can contact him directly if you're interested in the reverse mortgage. Josh is a great guy. And like I said before, I referred a number of my clients to him. They've all been very, very happy. So Josh, again, thank you for being here. Thank you for being a true professional, and it's a pleasure working with you as always.
Jason, thanks for having me. Nice chatting with you, and appreciate your time. Thank you.